Social stocks spreading their wings and taking flight despite all the scrutiny from Washington and consumers alike. Pinterest in particular having its best day ever. Julia Borson's got the details from Los Angeles for us tonight. Julia?
Scott, despite concerns that Pinterest, Snap, and Twitter were going to hit a wall, all three of those companies this quarter showing that, to the contrary, they have got room to run, revving up growth of users and revenue. Pinterest shares soaring today after beating expectations across the board, growing the company's overall user base 30% in the past year. And even in the saturated U.S. market, Pinterest grew users 13%. It also raised guidance for the rest of the year. The company's saying its investment in making it easier to shop and enabling brands to measure how their ads are driving purchases is paying off. And it's not just Pinterest. Snap and Twitter in their quarterly results also focused on how their improvements for both users and advertisers are yielding results, which has boosted all three of those stocks over the past year. Snap, with its new augmented reality tools, games, and expanded content offerings. Twitter has cleaned up spam off the platform and has made it easier to follow conversations. And Pinterest and Snap in particular are positioning themselves to benefit from Facebook's regulatory challenges. Pinterest CEO Ben Silbermann saying he takes privacy seriously and he wants to give consumers control, while Snap CEO Evan Spiegel also stressed in his earnings call Snap's focus on the safety and privacy of that Snapchat community. And while Facebook and Google have been dealing with their regulatory challenges, it's worth noting, Scott, they've also grown revenue faster than expected. Pivotal research saying this all points to a healthy U.S. ad market. Back over to you.
All right, Julia, appreciate that very much. Thank you. That's Julia Borson out in Los Angeles. Who wants to crack? Timmy?
Well, Twitter is a name that I'm long. Twitter is a name that I think it's all relative performance to itself sequentially. So 23% FX neutral ad growth, to me, is pretty exciting. This is kind of the trend that Julia was talking about. It is relative to itself, which is what I said.
All right, to itself. And so relative to its mega cap peers, it's Google and it's Facebook.
But why would you compare it to its mega cap peers?
What I'm saying is those guys are growing their sales at 25% a year, 137 billion accepted sales from Google this year, and 70 billion in Facebook. And when you look at Snap, Pinterest, and Twitter, they're combined maybe $7 billion in sales. Now, you may look at that and say there's an amazing opportunity, but I look at it and say the year that Twitter went public in 2013, they had about $700 million in sales. This year, they're going to have 3.5. It's kind of a snail's pace here, and their sales growth is not accelerating.
Isn't it interesting, though, isn't it, not to step on your toes, Steve, but isn't it interesting that there's a changing dynamic that's going on right now where you have Facebook, you have Google, and you have Amazon. They report and the stocks do nothing but go down. So it's almost as if people are searching for growth and they've turned to the Twitters. It's a new regime of growth.
I think that's fair. In the social media allocation space, there's not a lot to do. But I want to own a company when there's a pivot and an inflection point from some period in their business. That's what I think I see in Twitter. In absolute terms, you're right. Those guys are crushing it.
Yeah, but you do not see it in active users. That's just the main point.
But you see it in monetization, which is what this was always about, I think.